Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral. Overall, you're watching Trade Talk, and the key point to watch in today's session is that it is a truncated week in India, so a shortened week of trade, 4 trading days is what we will see. Overall, if you see in terms of where markets go, a range bound trade is what is expected so far. And clearly, the key highlight is going to be in terms of what's happening because the volatility is going to be high. We have F&O expiry as well this week. If you quickly pull up the key data points as well in terms of the markets. Now, the VIX is closed in the green for the first time in 5 weeks, and there has been long unwinding as well at levels of around 18,800 strike and above. So these are few of the cues that we've been picking up. Plus, the selling that we've been seeing at higher levels, that is expected to continue as well. So clearly, the analysts are of the opinion that buy on dips and sell on rally, and that's going to be the norm as well for some more time from here on. The broader markets are going to be something that everyone will be watching out for as well because it's 12 straight weeks of gains that we've seen. So there could be some profit booking that could be coming in terms of broader markets as well. Clearly, there is not much confidence yet in terms of markets, but the underlying tone is pretty much positive. So, clearly, if you see there is selling pressure that could be watched out for. Let's quickly look at few of the key technical levels that we will be seeing in today's session. Now, Nifty, if you go to see, seeing supported around 18,642. A break below 18,650 can actually take Nifty to almost 18,500. And if you see in terms of Bank Nifty, that consolidation has continued between that 43,400 to 4450 kind of a zone in the last 7 trading sessions. So a break in either towards either sides is going to actually help us decide the trend going forward. Overall, if you see in terms of the F&O data, 18,800 to 18,500, that is expected to remain the crucial zone. And we've seen the highest put OI at 18,700. And if you see on the call side, the highest call OI is 18,800. So that's the broad range that we're talking about. And Nifty has more call writing as compared to the put writing that we've seen. So clearly, if you go to see a range bound trade, is what is on the cards. A break in terms of any of the support levels is something that will actually help us understand what direction the markets will be taking. But clearly, from a broader, from a macro perspective, key factors we will be watching out for is the Q1 CY calendar year 23 US GDP growth data that is expected to come in. Apart from that, the progress in terms of the monsoon in India is something that the markets are clearly eyeing. The trend in terms of crude oil prices, as well as very lastly, if you see in terms of the what the FIs are doing, because clearly the DIIs have been slightly silent. It's the FIs which is supporting the Indian markets as well. So lots to watch out for over this week. However, it is going to be a truncated week as well. But moving on, one of the counters that is in focus is HUL. In fact, the rural demand is a key, a factor that everyone is watching out for, as well as how the monsoons, as we mentioned, progress. Rishi is standing by with more in terms of what MK has to say on HUL. Rishi, good morning.
Good morning, Hiral.
Rishi, overall, MK has initiated coverage in terms of HUL. What is it that they are actually pointing out to, and is there any upside possibility according to them?
So MK has started with a hold rating as of now with a target price of 2,850, which implies a 7.6% upside. Now, despite most of the sectoral headwinds, HUL has had an earnings CAGR of 10% over the last decade, which is huge considering its already large revenue base. Now, its home care segment especially experienced healthy growth. And when we come to its beauty and personal care segment, it experienced an increased competition, as well as it was struggling with respect to its D2C participants struggling with higher customer acquisition costs. But as inflation recedes, this segment is also expected to recover. Now, with respect to the healthy food drink segment, whose recovery is also crucial for HUL, MK expects accelerated growth in the latter part of this year as the milk prices cool down. Now, HUL has established a multi-brand strategy, which has made it immune to stress in any particular category. And also, in case of favorable demand scenarios, it will be able to drive its premiumization strategy. Also, HUL's WIMI, or the Winning in Many India strategies, which basically classifies India into 15 consumer clusters, has helped it to counter competition aggressively. Now, HUL has also upheld its 10-year valuation on account of robust execution. despite having several headwinds like the slowdown in the rural sector as well as inflation in raw material prices. The brokerage also expects HUL to clock a sales and earnings CAGR of 9% and 13% by FY26. So overall, to sum up, HUL would need to look out for the rural sector slowdown, as you mentioned, as well as inflation in the raw material prices. But any improvement in its beauty and personal care segment as well as the healthy food drink segment is also expected to improve its margins.
Absolutely. So clear impact that could come in terms of valuations is what MK is indicating. Thank you, Rishi, for getting us more details on it. But apart from that, one of the other counters that will be in focus is a TCS. Now, clearly, the scam that we've been talking about is not something which will actually hit the bottom line or have any impact in terms of the financials as well. It's more talking about a larger issue for the industry. The key questions that we at BQ Prime will be looking at answers to during the day will be what next at TCS, after the Bribe-For-Jobs scandal actually surfaced. Now, how will the investigation at TCS actually proceed? Apart from that, TCS's response is limited to say that no KMP has been involved and that it was a breach of code of conduct for vendors. Now, is this breach all pervasive? And lastly, if a whistleblower has brought this to light, it may not be a simple case of nothing has happened. All is hunky dory at India's largest IT company. So these are key big questions that we at BQ Prime will get you answers to during our coverage during the day. So watch out for it in more detail. But apart from that, Sajid joins us. Sajid, good morning.
Good morning.
Sajid, TCS, yes, it is a big story that we're talking about. No financial or business impact that we are seeing so far. It's more from a legal, a corporate governance perspective.
It's more of internal controls for TCS because if you look at TCS, how it works, it has a lot of subcontracting work which is done. That's subcontracting is to the tune of nearly 21,000 odd crores in an annual. It has risen from 17 odd thousand to 21,000 crores, and now. The question is that what kind of internal controls they have while giving those subcontracts to other companies or individuals or putting consultants on the roles, and the segment of which basically does this deployment, which is the resource management group, which TCS has said, what kind of internal controls they have and who approves those kind of enrollments and all. Remember, TCS has been increasing its subcontracting, and in the past earnings call they have said very clearly that they want to bring down the subcontracting because contracting eats into the margin, and they have a huge bench. They want to use the bench instead of the subcontracting, which is happening. So there is going to be a lot of question based on the kind of internal controls that they have.
Right.
Also the fact that it's very premature to even say that okay, there's no financial gain impact, because if the investigation is going on, why are you preempting that there's no financial impact in that? Let the investigation come out and then you talk about it, rather than saying it upfront. And if it's a cost, then it has to be approved by a KMP. So there is a KMP which is there, key management person, who has approved such a hiring or a cost, and that the buck stops with the KMP there.
Absolutely. So I think a lot of factors that will have to be considered. So watch out for this space pretty closely. But apart from that, pharma has been in focus as well. In fact, post-COVID, Sajid, the US FDA inspections have picked up because they were absolutely silent during those 2 years of COVID. Now, what are the counters we are watching out for, and how is the entire structure panning out?
So the US FDA in its recent interaction with the industry in Bombay, they had said that they're looking at better coordination with respect to communication. That's one of the big key thing which is lacking in many of the US FDA observations which is coming in, because either they don't have the paper trail for all the stuff they are doing, or they are not able to produce them at the time of inspection. And in the case of IPCA labs, they have come out with inspection of the Pithampur facility, which is in Madhya Pradesh. They have got 8 observations, and the company is talking about submitting a comprehensive response to the US FDA.
Right. Apart from that, in terms of Zydus as well, we're talking about some momentum picking up in that counter, and if you see pharma names, they have been in focus with the kind of, I mean, there has been some shift that's happening to the pharma names.
So there's a trend which is coming in. We saw Lupin talking about it, getting into diagnostics in a small way. Now Zydus is doing the same thing. They've acquired 6.5% in My Labs, Discovery Solutions. That values the company at around 1800 odd crores, right? Now this is a 6.5%. It's a minority one. They want to get into it and they get an idea of it. So it may be that in the future they may increase the stake, but it's an entry of Indian pharma, to distribution levels where they can. It's easier for them to push their solutions across to the patients. Now that's something which is interesting to see, because we have seen Lupin talking about, now Zydus is getting into it.
Absolutely. So I think that pack will continue to remain in focus. But apart from this, we are tracking the banking pack pretty closely. Now, some places where it's an indirect impact, for example, if you look at Go First, Sajid, clearly you have the creditors who've gone ahead and agreed for a 450 crore interim financing. Now, this consortium is led by Central Bank of India. So, Central Bank of India, BOB, IDBI, Axis Bank. These are the four names where the board has to now give the approval. But this will be positive, at least in terms of Go First. How will it pan out in terms of what the bankers will be doing is going to be interesting, right?
So it's a voluntary insolvency proceeding which has been initiated by Go First, but the repercussions have been much more, because DGCA has asked them not to fly anything, and nor DGCA is giving them the schedule for flights going forward. It's getting postponed every week, and I think this fund infusion may help them. But even the creditors on the committee of creditors have approved this for 450 odd crores. Every bank board has to approve it. Now that's a big challenge, because we have seen that happening in Jet, we've seen that happening here, and now going to see the hit here, and it's going to be only subject to a lot of conditions where the banks will be able to issue them. So if they are able to get the schedules from the DGCA, then the money comes to them. It's not going to be the other way around.
It's not going to be an easy process as well. So we watch out for this space. But you have a Yes Bank also that is in focus on the 2,500 crore fundraise. Yes, it is by debt securities, but just to flag that off, HDFC Life Insurance now, where the company has received a GST demand for 942 crores, and this is for a period pertaining July 2017 to 22. What they've said is that 250 crores has already been deposited under the however, that is under protest with the DGGI. Now, how this pans out for them is going to be interesting. RVNL has backed an order worth around 400 odd crores from Maharashtra Rail Corporation. So watch out for this one. 30 months is the execution timeline. In fact, Sajid also spoke to the management of RVNL recently. How is everything looking like, and how big an order do you think is this one?
So they work in a model where they get commissions based on the project cost, and they've been targeting order book of roughly around 75 to 1 lakh crore in this current financial year. They're saying that they're looking at revenue to order book ratio 1:3, so 3 times the revenue that they're looking at, and that would mean that they're going to see a good FY24 coming into play. But what is important is that they're looking at non-railway orders, which have increased a bit. Now nearly 20% of the order book is is coming from non-railways. If you add other states and other functions which they are doing it's now the order book is 53% railways and 46% non-railways in that sense. But they are looking at consultancy, which is a big one, where the margins are 2 times the current margins they're looking at. So it's going to be interesting thing how they are going to play on this capex cycle of Indian Railways of $29 billion, and Railways is looking at earlier they used to get by nomination, now they have to bid for it. It's going to be a competitive space, but they're looking at good run from here, and the stock has already run 300% in the last 1 year and 77% in this year year to date. So I don't know how much more steam is left
in the railway counters, absolutely, as Ajit is mentioning. But watch out for a macro tech developers also in trade. It's an interesting one, Sajid, with the company's application for We Hotels. Debt resolution has been successful, and the COC have declared the company as the successful resolution applicant. If you remember, the one which is We Hotels, that's always been a trouble in troubled waters. It was earlier called Tulip Star. moved to V, and it's prime property in Juhu area of Mumbai, absolutely close to the Marriott.
That's right. It's a huge property. I think they do rent it out for some movies and other stuff. But that property has been in dispute because of because of the partners, and then it went to debt. And it's just adjacent to JW Marriott in a sea-facing property, which is there. I don't know how many more properties they have under the V brand, but this one is one big one. If they are able to get this, it's going to be a big one. It will. I mean, there is going to be a challenge in how they will be developing it, but yeah, it's going to be a big
Absolutely, but and the property itself is currently mainly used for weddings. So
Yeah.
that's the only thing that we see out of V right now. But apart from that, good news coming in terms of ICICI Securities and ICICI Bank. 29th June is where the board is meeting, and they're considering a proposal for delisting, is what they're saying. What are the modalities according to?
So, what ICICI Bank has proposed is ICICI Bank holds nearly 74.5% in ICICI Securities, remaining held by minority shareholders. The board meets on 29th for a delisting, but the delisting is going to happen through a scheme of arrangement, which basically means that ICICI Bank will be issuing their shares to the shareholders of ICICI Securities. If you look at ICICI Securities as a whole, in the last 5 years since its listing, the stock is at the same level almost.
I think 520
was the IPO price, and today is 563, and that too because
in the last couple of days it's
it has
run up.
run up,
Yes.
basically of that. But in the 5 years, it has went to a low of nearly 188 and a high of 896.
In fact, if I'm not-
896 was at the height of COVID, and
and even the IPO was not fully subscribed, if I'm not mistaken.
the IPO was a very lukewarm one. So, there are few things happening in this sector. One, how online brokerages and discount brokerages are eating up into the market share of traditional ones. Though ICICI has an online front, but it's not in the top 3 or 4 brokers. This major business comes from margin lending. It's sitting on a cash of 6,500 crores. This is over and above the borrowings that it does of 8,000 odd crores, which is there on the books. But the borrowing is mainly done for margin lending there. So if ICICI Bank is merging ICICI Security Bank into its fold, you are getting that cash on the books of ICICI Bank. Today, it can't do that because it's a listed subsidiary, and there are restrictions on how much of money it can do, take put out. From a governance point of view, it raises questions there. So that's why this merger is going to help bring in the cash into the bank. But if you look at the market cap ratios, 18,000 odd crores is for ICICI Securities and roughly 6.5 lakh odd crores for ICICI Bank. The ratio comes to if you're holding 35 shares of ICICI Securities, you'll get 1 share of ICICI Bank. So it's a rough calculation, but there will be many more ifs and buts before a swap ratio will come in. But yeah, it's basically it's cash coming to the books of ICICI Bank, and shareholders of
getting
ICICI
shares of ICICI Bank.
But they should also be leveraging that you're taking my cash away, so I need a premium.
So what the modalities is something which will have to be worked out as well. But apart from this, the entire drone ecosystem is going to be in focus. Lots of developments there. You have Idea Forge, where the IPO is opening, Sajid. And apart from that, you have India, who's easing the drone export policy as well for UAVs. And this is mainly for the civilian use. If you have to combine this entire scenario in terms of what's happening on the export front and the IPO, how is what are the key details?
So okay, first Idea Forge IPO opens today. Its price between 638 to 672. They're raising 567 crores, which includes 240 crores of fresh issue and 327 crores of offer for sale by some of the promoters and the shareholders which are there. IPO closes on 29th. They're going to use 50 odd crores for repayment of borrowings and 135 crores for funding the working capital requirement, and investment in product development would be around 40 odd crores. Now, it's coming at a very crucial time because over the weekend we saw the government easing the entire export of drone. Now, drones are classified into 3 categories, small, medium, and high payload based on the payloads. What the government has said that, earlier, whenever you used to export a drone, you need to have security clearance from the government. So they have said that drones up to 25 kilo payload doesn't need any licenses or approvals for exports. They can easily do that. These are only drones meant for commercial
Commercial
purposes and
purpose.
cannot for non-military purposes, and payloads have to be very low for that purpose. So that export thing, which is now been opened up, is going to be a big boost for many of the companies, because earlier the only payload kind of customer for them was either government agencies or security agencies, basically army, armed forces or paramilitary forces or police for surveillance and the now this can be pushed to over other countries as well, or friendly countries as well, and that opens up the entirely new market for them in that sense. So it's a big move for them, and it comes at the right time because IPO is
Side
opening
effort
today.
as well. Absolutely. And any benefits that we will see for a Paras or any of
So
the
they
other
also have
guys?
some bit of it, but Paras also has some bit of military drones and other stuff which they do. But there will be a benefit. See, drone technology is all about how you are catering to various customers. Now, in this case, there are sub 25 kg. Kilogram payload load drones, so there will be a
Right. So,
some kind of opening of
but
that,
there will be a
but
sentimental
sentimental
impact at
impact.
least on other
So,
companies as
so the
well.
delicensing is the one which is important, that the government is delicensing
Exports.
exports for commercial drones, which is happening.
Absolutely. So I
Which
think
could
that
be
entire,
agri-based, which could be for any other
I mean, your mining,
land mapping.
all of
Yes,
that comes in.
yeah,
Healthcare is a
yeah,
second sector,
yeah, yeah,
which is seeing some good news. Thank you, Sajid, so much for getting us
yeah.
so many insights in terms of a lot of stocks that we've discussed today. So overall, a lot of sectors that we will be focusing on. It is going to be a day of, stock specific action. Overall, in terms of the action in the markets, is expected to be range bound as well. And it is truncated week. The volatility is expected to remain high on the back of expiry as well. So lots to watch out for. Please stay tuned to BQ Prime, and that's a wrap at Trade Talk. Back to you.